I want to bring up some other observations about the precious metals. Everybody wants them just to go way the hell up and sell them and get rich, I think. But there's a lot more to other factors that are involved, and I think there's a lot of things that are interrelated that I think should be looked at. This is a pretty interesting article, or I was in 2010 talking about Montana, the mining. Talking about the commodity prices going up. Of course, the precious metals prices went up, but also there was a scarcity of venture capital. I can agree on that. And for the exploration companies, and also talking about, in this type of mine, I guess they needed a lot of cement, but cement was used in the housing industry. After the crash of the housing market, a lot of these products that were used in the housing market aren't available that easily for the mining. So, there's been problems of even getting some of these materials that they need. He also talks about the cost steadily rising in energy, steel, and equipment. And so, there's not as much profitability in it. Although I know mining companies are generally making very good profits as of, with the current prices. I want to show something here. This is actually a couple years old. It's some data from, I'm not going to say where it's from. It's a portion of data that is from an actual mining operation that's proposed. You only need $1 billion to start it, of course, so where's there $1 billion today in today's market? Banks don't lend on this type of stuff very easily too. But I want to point out how energy relates to mining, and it's a major portion. This type of mine was like they dig down 100 feet into the ground, like an open pit, like almost like a tar sands operation for oil, but this is for gold, silver, platinum, palladium. They even had a biodiesel plant planned, $135 million. But look at under operating expenses, and this is a portion of a pro forma. I'm not going to pull the data out there or even say where the hell it's from, but just give you a reality check. Fuel diesel for company equipment, and that's, they're talking all the stuff that's out there, and there's a lot of equipment that's involved in mining. So like in the third year, you're talking $40 million worth of fuel diesel. And I put out, this is year 3 annual diesel fuel projections, 10 million gallons almost, right? Now, can you figure, this is about 40% of the cost of the operating expenses. 40% of it goes to diesel fuel the third year. As it's picking up operations in the fourth year, 50% is going to fuel. And that's, that's why they'll have a biodiesel plant. Actually in reality check, I think there'd be some numbers filled in here too. This wouldn't just be one expenditure in the beginning. But anyway, I'm not going to. But can you imagine what would happen if energy went up significantly? They're planning this profit margin on gold, silver, platinum, palladium, based upon a large percentage of the cost of mining operations. Besides the initial capital expenditures extremely high, but the operating expenses, a lot of it is extremely energy intensive, and I think a lot of people don't realize that. They just don't. They're looking at the spot price of silver going up and spot price of gold, but mining is extremely energy intensive. I'm not no expert on mining. I'm just aware of some things. But I fully expect the crude oil to go up quite a bit, in the near term, probably this year even, probably even for these last 2 months of the year. And in 2012, it's gonna be hitting new highs it's never hit before. So what is that going to do to the mining? I mean, say diesel, you're figuring here, I guess this is like I don't know, $3-4 a gallon. Maybe it'll be $10 a gallon. So this could be all double. I mean, that's a hell of a big difference. So in other words, the price of precious metals could have to go up a great deal if the people are continue mining operations. And you could see exactly what kind of vehicles are involved. There's cat, I don't know what that is, type of tractor, high lift loaders, 17 yard, 8 yard, road graders, excavators, dump trucks, 50-ton Freightliner trucks, lowboy trailer. Then there's smaller things out there. There's a mechanic service truck, Dodge pickup trucks. There's smaller ones, rock crushers, screening plant. All this runs on fuel. This is not even the end product. I mean, then it's going to go to like a smelting and refinery. More energy used, the heat to make, to do the smelting. More transportation involved. And I would almost be able to bet that this fuel cost probably doesn't include like, maybe it's probably some of it's involved in this EPA, environmental issues. There might be some then they have to do with impact studies on the road and improve roads. I don't know, but I mean these kind of operations are extremely costly. So you could figure, even though there might be plenty of precious metals in the ground out there, they're not going to just jump out of the ground in large volumes. So if everybody's seeking gold and silver because there's a panic over the financial markets, you're not going to see that supply come to market very quickly. And the real point I'm making here, energy, crude oil prices is a major factor in the cost of getting the stuff out of the ground, because all this equipment runs on diesel. And just to give you an idea how much diesel, well, this is a price of gasoline, but I'm assuming that's fairly close to what the diesel is. As I think some types of crude oil, if it's this light sweet crude oil, you can run that straight right in a diesel engine and runs perfect. But 73% of crude oil is the portion that goes into gasoline. In other words, gasoline is 73%. The price of is crude oil. I'll explain that better. So when crude oil goes to $200 a barrel or something like that, you're going to see the cost of mining go way the hell up. And the only way the stuff's going to come out of the ground to meet market demand is the price is going to have to go way the hell up. So I assume all this is going to work together. So even though the crude oil prices might bring down the S&P, and I know they brought down the silver in the past with the S&P, I don't know if it's going to do that the next time around when there's a really major crash. I think there's going to be a panic into the metals, and they're going to go up instead of down. There's another curveball coming up, but I mentioned this a couple times before, and I saw it, they were talking about this too since August, but I just really became aware of it recently, very recently. But an all-encompassing euro bond is being proposed, and it probably is the only way the euro is going to survive. And to tell you the truth, I think the euro is going to survive, even if might be Greece won't be in it or something. Say Greece is out of it, I don't know. But I think the euro is going to survive because the powers that be want it, and they put a lot into it, and they're going to find a way to keep it. But what happens when there's an all-encompassing euro bond with all countries? China will likely buy the euro bonds, right? They're not going to touch U.S. bonds. They're going to get rid of U.S. debt as much as possible. You're probably going to see that happen with other countries too. China's the EU's biggest trading partner, so dead on, they're going to definitely be buying euro bonds. I don't know, they're looking for a safe, secure investment. So, but considering they do a hell of a lot more trade with the European Union, it's a smarter play for them. They're getting stuff. The European Union is exporting a lot to China also. One thing, and this is something. This here was something Webster Tarpley actually alluded to. He expects, and I agree with this, that the powers that be, if you want to put it that way, I don't like saying that because it's too conspiratorial, but they will bring up the price of crude oil very high, because what that'll do is create a demand for dollars to be held in foreign hands, because all countries have a big need for crude oil, and crude oil is priced in dollars, um, what's going to happen is that's going to create a bigger demand for dollars to be held in anybody's countries because the prices of oil is going to go up. I think that's going to be a play to hold the dollar together a little longer. I've been thinking this for a while. It really hasn't happened yet, but I stick with that logic because when it becomes desperate to hold the dollar together a little longer, and we know that the oil interests want to bring out another currency based upon the petrodollar or some type of petrodollar system as before, they're going to hang on to the current dollar as long as possible. It's also another logic I was thinking was that you got really three major economic areas in the world that are really super strong. That is China, European Union, and the United States. Now, if euro went down, you know what happens when there's a problem with the euro. All the capital, all the money flows into the dollar. Well, if the European Union and the dollar went down, it would flow over to China maybe. Or if China went down and European went down, it would flow to the United States. Or in other words, or if it was Europe was the last one to survive. It's whoever the last area is that's standing, all the panic is going to go to them, all the capital is going to flow to them. So nobody really knows how this game is going to play out exactly, but I could follow that simple logic that of those three big power centers, the one that survives, everything is going to pour into them. That'll be the safety. So our people do have an interest in keeping the dollar alive for quite some time in some ways, you know. And when they knock it down, they want to have maybe a similar system. And I'm going by what Lindsey Williams said, but to tell you the truth, you know, I know the guy sometimes he presents things a little like you wouldn't want to believe him too much, but I think where he's getting his information is very, very valid. So I think the oil interests are going to want to have a similar arrangement with this petrodollar as they had before, just that'll be a different currency. So they want to, when they crash the dollar, they're going to do it on their own timetable. So I think they'd want to keep it going for quite some time. And I think if there's too much pressure on the dollar, maybe if this Eurobond comes about, they're going to increase the oil prices, and that's going to affect the mining big time. You know, because people don't realize how much of the operational cost of mining is energy and fuel. It's a lot more than people think. So just again, but we see our threats to the dollar. Russia began selling the oil to China in rubles. They don't use the dollar reserve currency anymore. China pays Iran for oil in euros. So you know, piece by piece, you know, it's going down. So this, I think, might come about. Webster Tarpley actually said again, he's the one that alluded to this, but it makes perfect sense to me. Raise the oil prices a great deal, and what do you have as a result? Greater demand for dollars to be held in foreign hands, and also a much greater operating cost for mining of precious metals, which means the price must go up a great deal if they're going to mine it. So you're talking, you know, I know the markets are rigged somewhat and stuff. I'm talking there is market manipulation, but as far as, you know, what's going to happen short term, to tell you the truth, I think these precious metals are going to start going up a lot more, very unexpectedly. Like I was talking about earlier, the Japanese yen was recently devalued by the central bank. That was another safe haven. The US dollar, safe haven? I don't think so. Euro, safe haven? No. Swiss franc, they changed that. They pegged it to the euro. No longer a safe haven. They're running out of places to run. So, you know, it's a patient game, but do expect the metals to freaking jump up a lot unexpectedly, I think, pretty soon.